Yo, what's good, guys? What's happening, everyone? So I'm doing this video quick, fast, just to get it over to you. Okay? But Bitcoin's dropped. Fair and square. All right? In front of you right now, ladies and gentlemen, is the story of Bitcoin's drop and how we've been monitoring this. Go back in the streams, ladies and gentlemen. It's all there for you. Trying to understand the profiling of the market maker's behavior. Okay? Let's start with this one over here. This image. This image was taken back when Bitcoin was, just roughly around about the 8th of December. Okay? So last week. Where we saw the hit to the high. Everyone getting a bit excited that this was going to be the bottom. But we were expecting that the wick needed to be realized. They need to realize the wick because it's an imbalance in the chart. Most people are saying, Tino, you're full of it. It's not going to recover back to the wick. The 50k zone is going to hold. They're not going to break down lower. They can't because the whales. Forget it. This determines who's in control of the market. No whales. No retail trader, no banks, no nothing. It's the market maker. It's where he decides where he's going to start working his positions in line with the spread. Okay? It's what he decides. And the sooner you get that in your mind, the sooner you're going to be able to pay attention to when price is starting to develop into a certain play. We expected that from this drop to the downside, it was going to land towards the 45,666. Well, guess what? Today's low ended at 45,672. Not bad. Not a bad move. What was the significance of this area right here? Inside here, ladies and gentlemen, are the vector candles that are within the wick. Okay, and I've mentioned this in a previous stream of last week. Each candlestick right here is represented with a horizontal line. Notice where the horizontal lines sit. 46,347, just slightly above a quarter number of 46,250. The next one, okay, sits around the 46,000. One after that, below it, it says 45,523, the halfway point. Then you've got the 45,000, then the 44,500. The way we established that, ladies and gentlemen, is we took the open of the vector candle, the blue or the green vector, okay? And then we took the midpoint of the blue or the green vector candle. We did this so that we can understand that if they do start to break down price, then these are the particular zones that they are likely to bring price back down towards. All right? So there you go. That was the first instance, okay? Then we had last night's trade. Last night, in the Asian session, we were expecting them to move up to this zone, come away from the 200 EMA, and if they were going to continue higher, they would come down and retrace continuation to the upside and hold above the 200 EMA. They didn't do it. You look closely, you can see that you had green vector candles in this range right here. And you can see on the chart right there that they recovered the green vector. They didn't follow through with a move to the upside. Okay? Notice the 3 pins to the high right there. 1, 2, 3 hits to the high. Okay? They do things in threes. From that point, we expected them to come back down and take this liquidity pool if they were going to break down lower and close below the psychological ranges. They did exactly just that. Look at the pattern. You can see right there. Drop, retrace, continuation down. They broke below the psychological range, which you can see right there. The psychological range sits here. And there it is. And we said it. With the psychological ranges, when they break away from the psychological high and go lower, they've dismissed that range. That is now resistance. If they can break below the psychological low and try and retrace and break away from it from that point, they will go lower. We were waiting for them to test this range and move back up. They didn't. Price went below the 50 EMA. It was below the 5 and 13 EMA. The moving averages themselves were expanding out. You can see the 5 and 13 EMA opening up and expanding. Momentum was coming into the chart. Okay? Now look at this. So, in today's session, they came down, recovered that wick right there. They came down and recovered this wick. They came down and recovered this wick. The final wick that they could have taken out was what? At the wick, the main wick, the big green vector candle, which sat at the 46k zone. Okay? Where did price end up? Bang, 45,672. How could we have understood this was going to happen, ladies and gentlemen? Well, the behavior is no different to what they did last week. 1, 2, 3 hits to the high. They drop price down, stop hunt rise, they collapse price. Recovery of the green wicks right here. Second, they did it again here. 1, 2, 3 hits to the high. They drop price, initiate a move to the upside, stop hunt rise, commit the retail traders. Funnily enough, it's exactly the same thing that they did last night. They did it here on the 25th of November. Look, 200 EMA. We were waiting for them to retrace back down to move to, away to the upside, but they didn't. What did they do? They recovered the green vector candles and the blue ones as well. 1, 2, okay, 3, and they came down and recovered the full wick right there before they stabilized and moved away from the zone. I mean, look, it's right there. It's exactly the same play. 200 EMA. Yeah? Look at the last high they made. 1, 2, hits to the high, drop, retrace, stop hunt, rise, Monday, false move, week beginning, drop. What I'm trying to get to you, ladies and gentlemen, is the patterns of price around key notable areas. What were they doing? They were building the shorts above the 50k zone, but they were not going higher. All the candlesticks that you see breaking above the 50k zone were designed to induce the trader to believe Bitcoin was going to 100k. Guess what? It didn't go anywhere. We've been waiting for a move to happen. All right? And the whole point of coming every single day to the streams, and yeah, I'm repeating myself, guys, because guess what? They repeat the same thing over and over again. Yes, 1, 2, 3 hits to the upside, they drop. If you have a problem making a profit on a short like this, then that's your issue. Here we go. 1, 2, 3 hits to the high, stop hunt rise, drop. Okay then, fine. You're not happy with that? 1, 2, 3 hits to the high, retrace, back up, drop. If you're not able to try and understand or make anything from this because it's boring and repeating all the time, don't watch the streams, ladies and gentlemen, because this is what this stream is about. It's about helping you understand the relationship of price around key areas and helping you understand what is the market maker trying to do. It's clear as day, isn't it, ladies and gentlemen? Look at the whole and half numbers of where they're building the shorts above key notable areas. Look at the lows. There's no conviction that they favour lower prices to get longs filled at shorter prices, at lower prices, so they can move higher. Look at where the green vectors are. They are showing strong movement to the upside. They are luring retail traders to believe price is coming in. And this is the same thing again with the book map as well. The book map, it shows you where the liquidity is at. But there are spoofs in the book map. Remember, crypto is unregulated in terms of trading. Spoofing, by principle, is sort of illegal. Putting fake orders to trap people into the belief that there is going to be interest at that point. And then towards the last minute, they pull it out. What can we expect next from Bitcoin? Well, quite frankly, ladies and gentlemen, we are coming away from this range. So far, we have worked nearly a quarter of the wick. They've come down and hit the zone. What do we understand about wicks? They're going to be recovering this area, my friends. They're stabilizing price. The significance of these arrows right here is from this chart right here. Shared this image earlier on to the guys that attend the masterclass. Bang. What happens? Vector 1, Vector 2, Vector 3. These are the areas that we expected the vector zones to appear. 1, 2, 3. What I'm trying to get at to you, ladies and gentlemen, is this game can be exploited if you collate enough confluences and demonstrate an understanding of the market maker's behavior. All right? Forget about what happened in 2015, 16, and 17. It's irrelevant. Because in 2017, Bitcoin wasn't 45k. Bitcoin wasn't 60k. Bitcoin wasn't 67. It's irrelevant. All you need to care about, ladies and gentlemen, is the behavior of what they're doing around price. Bitcoin could be 60 cents, ladies and gentlemen. Okay? They will do exactly the same thing in that range. Come away from the idea of attaching value to Bitcoin. It should be 56. It should be 80. It should be 100k. It's irrelevant, man. Who cares? You're traders, yeah? Do you think a holder cares about price? He only cares that if he gets it at 50 and then he looks at his portfolio and it's now at 81, he's made a return. Happy days. That's as far as it goes. But a trader doesn't need to care about what the price is. What he needs to care about is what is price doing at that price. What are the behaviors of price in that range? 1, 2, 3 hits to the high, drop. If you can't see it, ladies and gentlemen, go and watch the previous streams. It's all in there. As it stands right now, Bitcoin could be formulating what we understand to be the start of a big W formation. But quite frankly, ladies and gentlemen, before this formation comes into play, they're going to need to do something about this range. Many people said it. It ain't going to come back to that wick, Tino. You're full of it. Ain't going to happen. It came back down towards that range, man. People asking those funny questions. I thought you said it was going to go to the wick. Well, there you go, my friend. It came to the wick. And we are expecting it to come into the wick much more deeper as well. Because in last night's stream, roughly around about the 49-minute mark, we were talking about why we only saw 1 hit to the low right here, 2 hits to the low, and we are expecting 3 hits to the low. There's your 3 hits to the low. How long this low is going to come into play for is going to be another story. Guess what? Can't tell you where it's going to finish, but I can give you an understanding of where the liquidity is previously in, okay, or the zones that liquidity is at, to help you understand what are the chances of them coming back into that range. Because, guys, listen, if you're coming to this game in the belief that you want guarantees, get out. Save your money. Because this game has no guarantees. It's all a game of chance. Probabilities, all right? No different to the game of poker. It's all about outs. That's all it is. Once you've got a pair of aces pre-flop, you statistically have got the best hand in the game. If the flop plays out 2, 3, 4, now your pair of aces are a little bit marginal because that other person only needs a 5 and a 6 to line up for a straight. He's got 2 outs that he needs to hit. Done. Yeah? You got to be careful, guys. This game is not about guarantees. It's about exploiting the momentum. They can't hide their momentum, okay? And they can't hide the repeatable patterns. The patterns of price above 50k zone. Shorts, shorts, shorts. Look at this, man. They did exactly the same thing over here. Look. They did exactly the same thing here. But they did it at the 59 zone. 1 hit up, 2 hits up, and they brought price back down, spiked it all the way back up. Okay? So they built the shorts. Look at what happened over here. They did exactly the same. Spiked above the 50, spiked above the 50. They dropped price down, and then they spiked it one more time and pulled it back. If it hasn't sunk in yet, ladies and gentlemen, you need to go watch all of last week's streams. Because we've been talking about the breakdown of this range. I haven't said anything to anyone chatting to me about the fact that the wick hadn't been recovered because price was rising from this zone, and then it was rising from this zone because everyone was expecting Bitcoin to do some crazy ass move to the upside from this area. Well, congratulations, ladies and gentlemen. The market maker has won yet again. Why? It's his business. Of course he's going to win. I hope everyone is well, man. Mad love and respect to all of you. If you are new to the channel, be sure to subscribe. If not, the takeaway from this, guys, is simple. This game is not guaranteed. It's all about probabilities. It's all about understanding the flow of liquidity from one point to the next. That's all it is. Nothing in this game is static. It's variable. You have to come to trading with that mindset. Because then you eliminate the idea of emotions and being attached to a direction. Have yourselves a lovely evening, ladies and gentlemen. Mad love and respect. Peace.